All right, guys, so the real estate stats are out, and one of the highlight stats is that sales are down 41% from last year. In addition, we saw the largest month-to-month price drop as well on different housing types. If you want to understand what this means to you in today's real estate market, this is the video for you. All right, guys, so we're in August 2022 and we're taking a look at the Toronto Real Estate Board stats of last month. This is actually going to give us a better understanding of what's going on in our marketplace, what's going on with average price points, sales volume, activity, etc. I'm going to give you some insights, whether you're a buyer in this market, a seller, or an investor, that is going to help you make better decisions going forward in these market conditions. One of the things that we always chat about when we're in this video is that we're looking at average prices from last year, and we're also comparing month-to-month average prices from previous months as well. We all know that a few months ago we were in a much heated real estate environment, and we had peak pricing in February 2022. The other thing that we take a look at as well is months of inventory. It gives us a gauge of whether we're in a buyer market, seller market, or in a balanced market. I got to tell you that things are shifting pretty quickly from the beginning of the year, but also let you know some insights as to why that is happening, which I think is going to be very useful as well if you're looking to make a decision going forward. So the first thing we're going to show you is this nice chart that we typically put up here. So this is actually our Toronto Real Estate Board average price dot graph. Now this graph is actually really good because it gives us a different perspective as to what's going on with prices, and we actually have this listed all the way since April 2018, so you really have a good glimpse and a good idea of how the real estate market swings. There's these typical ups and downs as you see over here. This year we've had our peak pricing, I believe it was 1.33. And we've seen that we've had 1, 2, 3, 4, 5 additional months of continuous drop in average price point. In addition to that, sales too. So one thing I wanted to point out, like I mentioned in previous videos, is that now you saw that this we had a pretty heated market from the 2021 to the beginning of this year. It's actually deviated from this nice little ascending trend that we've had for at least 2-3 years before time period where we saw prices going up so much. And now that we've had these continuous drops month over month, we're kind of more in line now with that trend line that we were in before. So we're gonna have to see kind of how this plays out. You know, some of the conversation that I keep hearing nowadays related to the fact that we've already hit peak pricing, we know where that is, but now people are trying to figure out, well, when is the bottom? And when are we gonna be able to recover, or when is this gonna start turning around? And I think I see a lot of people kind of with their eyes open a little bit more now, thinking maybe I can get into a property with a better deal now. Maybe the bottom is coming. These are those things that are really hard to predict. What I tell people and what I've seen in the past is that when you see other people getting back into the market, typically you're already too late. And you'll only really know as you look back into the past. You'll only know 3 months later that, oh, that was the bottom, and maybe that's when I should have bought properties. You'll never really know in the moment. However, what you can control is taking a look at what prices are today, doing your math on your budget and what things would cost, and then if you think that that's actually doable for you on a monthly basis, then that's amazing. We're actually going to go into a lower rate environment maybe in a couple of years to 3 years after we've kind of quelled and dealt with the inflation that we've had in this country. And that's the reason that we have higher interest rates right now. So this is why the suggestion is going to be getting into a variable mortgage, because it's possible that in that 5-year term, towards the end of the term, you're going to benefit from lower rates versus locking in a 5+% rate on a fixed side, and then you're stuck with that for the whole entire term. Okay, so that's where we're at in the chart. I'm actually going to put up. All right, guys, so we're going to take a look at our month-to-month changes. This gives us a little bit of a different perspective. We have been tracking these numbers since February, which was peak pricing that we've had in this last real estate cycle. And well, let's take a look at what July brings to the table here in comparison to June. We see here that we do have another month of drops in sales and also average price. Those month-to-month drops have now steadily become a trend. You saw in my previous chart that for about 5 months in a row we've had drops in prices, and this is showing us that it's continuing here in July. We have about 1.36 as an average price for detached homes, and that's actually down 6.34%. So about 12% or so in the last couple months, we've seen a drop in detached home prices. Actually, if I add up all the way since February, you'll see that we're actually closer to about a 27% drop since February for detached homes. And that's incredible to see. I mean, that's definitely a big move. And the other home types have also had similar drops as well. So semi-detached homes here are just above $1 million. We have towns of just at 900,000 and condos in the lower 700s. Condos have been pretty resilient. You see here that, well, this time actually townhomes had the smallest drop month to month, but typically we've been seeing that condos have been kind of holding their own. And that's because condos didn't have the same type of increase in price that we saw detached and semis, low-rise homes experience over the last couple of years. In total though, for these property types, average drop of about 4.3% throughout these different property types from last month. That's a very interesting to note, okay? So let's see if we have a continuation of this into the months to come. Our average price is at 1.074, and it's actually a drop of 6.4% from last month. In total, guys, when we do the average price, we've had about a 26% drop since February of this year. So that's very interesting. Well, I'm just here to kind of inform you guys, right? I'm letting you know these are the different price points, the data that we're seeing out there. And I think that what we can determine is that we are now definitely in a lowering trend, and this has to do with two different factors. One of them being interest rates going up for obviously the cause of being able to slow down inflation. And the other one as well is that we've had a really quick increase in price from last year to the beginning of this year, which was unsustainable. Price point was going up way too fast, and this is kind of like a correction, which is what we're hearing from a lot of different banks in the reporting, is that we're looking to see a correction happen from these elevated price points. And we also know the interest rate being so high right now is also temporary. Obviously there's demand to be in the GTA. One thing that we're seeing as well is that rental rates are on the rise as well. A lot of people are not able to get qualified for a new home due to interest rates, and a lot of people are going into the rental market, and I've seen all different types of rentals quite high. And what I've seen in the past as well is that many times when rental rate has an increase, you also start kind of questioning why you're renting, because sometimes that payment becomes really close to a purchase. And so we may be seeing these dynamics kind of converge. We're going to have to see over the next couple of months how this all kind of plays out. I'm seeing a lot of deals on the investor side. There's properties out there at much better price points, and even if you do get lower 4% variable, I still see cash flow, and I know that you're going to benefit from a lower interest rate later, which is just going to increase that monthly cash flow. And I know also prices will recover. I think we're getting in at really good prices. Okay, so we did take a look at our month-to-month change. Let's take a look now at a different perspective. Let's compare July 2022 to July 2021. You do see that we do have a price point that's a little bit higher than last year, 1.074754. And in fact, that represents a 1.2% increase in average price. So, it's just interesting to see that on a month-to-month basis, we have a pretty steady trend of coming down. But still, even with this average price point in July, it's still a little bit higher than what we saw in 2021. So pricing is still higher, at least in this month, but obviously we've been kind of trending in the downward direction. So we'll see if next month we'll see our first negative average price change from last year. It could happen. It's wouldn't be the first, won't be the last, but this is what we're looking at the moment. Sales have also dropped quite a bit. We have them here at the top of the chart. You see that we're at 4,912 sales this year in July versus just a little bit over 9,300 in 2021. That's a pretty significant drop. It's 47.4%, and this is the biggest drop. So this is what you're going to see in the headlines tomorrow or in the days to come, or if it hasn't been already out. But I would say 4,900 is pretty low. I mentioned in previous videos, like 8,000 is pretty average on a month-to-month basis, or every single month. That's a kind of good gauge. Every month we have about 8,000 sales. Some months a little bit more than others. Summer months sometimes a little bit lower. We're in a July month, so I do expect lower, but 4,900 is definitely on the low side. So you can see the activity has dropped quite a bit because a lot of buyers are taking that approach of waiting out and seeing kind of what's going to happen, which could be a little dangerous for some people as well. Like I said earlier, sometimes once everyone's jumping in, you're a little too late. I think this is a good opportunity to kind of keep your eyes open for something if you're looking to buy. Listings are a little bit down from last year. We have a much more active listings, so that just goes along with the trend as well. More properties on the market right now, more selection for buyers. Almost 58% more listings on the market than the same time last year. So, bidding wars, although people are still trying them and they still work out for the nicer homes, especially here in Toronto. A lot of homes are on the market for quite a while before they get sold. So that's the case. We're up 1.2% on our average price, and our average days on the market as well are steadily increasing. PDOM is actually a really good indicator because it includes when people delist their properties and relist them again. And you're seeing that we're hitting almost a month of being on the market before a sale happens. And that doesn't even mean a sale may happen. They might have just terminated after that month because they didn't get their number. And some people are still looking for those type of numbers, and I'm really not seeing it happen anymore. So you got to be a little bit more realistic on what the expectation is. All right, this is the other document I was talking about here. Just a different view of our monthly price, because we are comparing to the last few months. It's a month change, and you see here that in February is when we had our peak pricing at 1.33, and we're at 1.074 right now, which is a little bit higher than July of last year. So we're really now, kind of back to a summer 2021 price. That's kind of where we're at right now. We've kind of come full circle. We've had this really huge run up that kind of lasted a few months, almost 6-7 months, and then we've had about a 5-month drop in the other direction as of late, bringing us back almost to where we were last year in our price point at the moment. So yeah, this is what we're seeing right now. We're seeing a pretty significant trend. I would say almost half a year now of price drops since February of 2022. And that's a pretty good trend. We've had a almost 26% drop in an average price from the beginning of the year. And we're going to have to see if this continues into the future. We're going to give a couple of tips if you're in the market at the moment, because people are still looking to move around. And honestly, I think that there's some opportunities, whether you're a buyer, a seller, or an investor in the marketplace, just depending on what you want to do. As a buyer right now, it still makes sense to get a variable mortgage. I would probably try to get something locked in before September, because we are anticipating the Bank of Canada to increase interest rates again, which obviously are going to impact rates for mortgages. And you want to have your payment as low as possible if you're getting into a new situation. So I would get our pre-approval locked in prior to September. And you're still probably in the low 4s for a variable rate. And you're in the 5+ range if you're getting a fixed rate at the moment. There are deals out there, guys, right now. I've seen really nice homes in really good neighborhoods where in the past it was, they'd be sold in about a week or two. They're on the market a lot longer. And they're really decent homes. You have a selection now, you have a choice, and you're able to negotiate directly with sellers. You can buy properties with inspection conditions, financing conditions. All those typical things that we see in a normal market are appearing again, and few buyers that we're working with at the moment, and it's going pretty smoothly when we're negotiating our prices. The important key thing here is getting a pre-approval, locking in that rate, and having a good idea of what your budget is on a monthly basis. Or, at the end of the day, any house that you want to put an offer on, you can do this research to have a better understanding of what that monthly expense is going to be. And if it's in line with what you're making and you're okay with actually making that payment, then I would move forward, because likely you're buying a property for long term. And over the years to come, there's going to be a lot more people coming into the GTA. The demand is going to be up. Interest rates are going to also settle down as well in the years to come. And so when you're looking long term, these are still good moments to get in. You're paying almost the price point that you would have been paying last year at the same time. So hey, you're getting in at a much better price point. And again, you cannot predict what's going to happen into the future. So staying on the sideline and waiting for somebody else to make an action is probably not the best thing to do. I think you need to just be selective of who you're talking to, and you need to do your research. And at the end of the day, if you can get into the property right now, I think it would be a good moment to actually do so. Okay. And you go against the grain when people are kind of sitting on the sidelines, then hey, maybe it's the time where you should be actually looking for property. Okay, as a seller, guys, we've had a pretty decent hit to our average price. Unfortunately, I hate to break the news to you, but it's probably in the news and something that you've heard already and that you've seen in the neighborhood. A lot of signs on, your neighbors' lawns, and they're not necessarily sold right away. And so this is the case in basically all GTA neighborhoods. However, there are some pockets that are still pretty hot, and it really depends on where you're living. So you got to reach out to us, guys. The information is below to get in touch and to get a better understanding of what's going on in your local market and the few streets around you. That's really what's going to give you an idea. Okay. Now, as a seller, you're still able to get, your property sold. You just need to really put in the effort, put in the work, rely on somebody who has experience, listing experts such as ourselves. We go above and beyond, and we've always done that even in hot markets to get just that little bit more on the price point and to remain on the market a lot less time. Staging your photos, your drone videos, these are all things that we do for our clients day in and day out. And so these are the things that we've noticed have always worked in any market. We sell all our properties that we put up for sale, and we're just really realistic with our clients and show them data to have a better understanding of what the market value is, so that we're going into the marketplace with a smart plan, strategic plan that's going to give us the best chances to actually sell the property. And we've been getting good numbers. We're not getting record numbers for 2022, but nobody will at the moment. So you're in a position where your property didn't go down in value as much as detached homes, and you can now sell for still a decent price and go into a larger semi or detached or townhouse situation where that property price has dipped and been hit a lot harder. It's actually a pretty good move right now, and we've been helping a couple people do the same sort of transition. So if you're in a condo and you're thinking about moving up, this might be the time that you got to be kind of considering doing that. Okay, there's still a lot of demand in entry-level homes, and if you do have a larger condo, even more so, because people are looking to move in even with families into condos. Okay. Now, as my investors, I would say that this is a really good opportunity. You got to go against the grain. If everyone's sitting on the sidelines and you should be pouncing, I know other investors that are really looking. We're buying. I'm seeing deals on the marketplace. Get in touch with us if you want to get our list of off-market properties. They never go on MLS, but you have an opportunity to at least 1 hour and a half away, a radius from the GTA. Properties that have been selected personally by me because they have a really large margin from a market value perspective. They're probably good buy and hold situations, maybe flips, or maybe really good burrs where there's a big gap and you're able to renovate the property and refinance and repeat. So we know those things. These are the things that we actually do ourselves. Look, if you're interested in doing investing, get in touch with us so that we can actually go through some of the numbers that I've been seeing, even with today's interest rates, and the fact that there's still properties out there where you can cash flow over $1,000 a month. I literally just found a triplex a day ago, and I'm really thinking about even getting it. All right. So yeah, guys, these are the numbers that we're seeing right now. It's very interesting to see how things are unfolding, and I think that we have to keep an eye on the marketplace, and you got to keep an eye and subscribe to us over here as well, and send us a message if you want to get some insights as to what's going on in our marketplace and what to do based on your situation. We're happy to help. Leave a comment below as well to ask any questions related to this video or the information that was shared. And yeah, we're going to see you guys in the next one. Thanks again. It's Daniel from King Realty, and we'll talk to you soon. Take care.